Hey, everybody. Welcome. Joe, welcome. Appreciate you being here. And thank you for sending everybody from your side over to this side. Appreciate that. Appreciate
Very
that.
welcome. Very welcome.
All right.
Yeah, there's a
Hey,
lot of people
we
right
got
now streaming. There's a lot of people right now streaming. So everybody who is here, we greatly appreciate you guys. We love you so much because you could be anywhere and
That's
you're here.
right.
So
But
thank
you're
you.
here. Exactly. And we got a lot of people jumping in on X. Appreciate you. I've had a lot of people on X lately, and I really appreciate that. So thank you for being here. I've got some links I'm going to end up sharing with you as we prep for Powell's speech at 2:30, which is why I changed the time here to start at 2:00. So we are going to definitely be following FOMC stuff, but there's some other things I want to share ahead of time. But let's quick shout out to the chat. Now, listen, Jar stopped in super early to drop this comment, and I thought that was awesome because the poor guy, he's busy moving, trying to run his business, try all this other stuff. So thanks, Jar, for stopping in, and I wouldn't hold my breath on him saying that word by any shape or form, but appreciate you chiming in with that. And look, here we go. A West, appreciate you being here. Crypto Sati. I love the way he spells that. It's awesome. Dynamite in the house. Appreciate you. Sin. Appreciate you coming back. And let's see, who am I missing? I feel like I'm missing somebody. I got Sin. Oh, Sam. Hey, can't forget Sam. Sam, welcome. Appreciate you. And yes, we'll do the wave right there. There we go. All right. Anybody else? Dave P. Just jumping in. Welcome. Appreciate you being here, Dave P. As always. All right. Here we go. I want to share this first. They sent me a direct message on X, and I said I would share it on this stream. So this will be the first thing I share, and I'm going to put the links out in the chats momentarily, but I want to bring it up on the screen first. So, no, wait, I lied. I prepped this. Joe brought this up on his stream. I lied. We'll do the Citizens for Sound Money comment in a minute. But for those who don't know, yes, there is some definitely Microsoft Trojan information that is affecting MetaMask, Coinbase Wallet, Trust Wallet, OKX Wallet, Phantom, etc. So make sure, again, this link is in the chat. Matter of fact, it will be in the chat in 1 second. Hang on, I forgot to put that in there, and bam, there it is. So if you're not already aware of this, I did share it on X. Joe mentioned it on his stream a little while ago, and it's information that hopefully has not affected you adversely at this point, but you should be aware of it. So I apologize that I prepped that wrong. And 100 Air is in the house. Appreciate you being here, my friend. And yes, on the road. This poor guy is on the road all the damn time. But I appreciate you tuning in while you're here. And again, if you're new here, appreciate you being here. Make sure you smash up that like button. If you're on X, share this thing out. I appreciate you. We got a lot of people on X. Right now, as I can see it, we got over 150 people on X. So thank you very much. Appreciate you being here. I will jump over there and put some comments, but if you want to comment, put it right in the chat. It'll pop right in here for me, and I'll be able to share it up on the screen. If you're new, make sure you hit that subscribe button. Appreciate that, and share this thing out. And for Joe's stream, information in the description below. You need to be following him, especially if you are on the trading side of things. All right, here we go. This is what I promised I would share out here. Citizens for Sound Money sent this to me in a message a little while ago, asking for us to get the word out to try and spread the word. So I'll just read it as they have it here. Now, basically, for those who don't know or who might be new here, Citizens for Sound Money and their executive director, Daniel Diaz, are advocating to make gold and silver legal tender. They're going on a state-by-state basis, basically, at this point, and they're really pushing hard and close in Florida, and that's what this is about. This is talking about this HB 999 in Florida, and I guess they're holding a bank insurance and banking subcommittee meeting about this tomorrow, a hearing about this tomorrow at 2 p.m. to 5 p.m. Eastern time at Morris Hall. The bill would recognize gold and silver as legal tender in Florida, offering financial security, inflation protection, and economic resilience. Bottom line is that's all 100% true. Hopefully, if you have not already done so, you can go ahead and check out the playlist that I have with Daniel Diaz as he talks sound money. Go back and check those out. And basically, Citizens for Sound Money here is saying we need your help. Contact your committee members and urge them to vote yes. And again, the link is in my on my YouTube channel, and I'm about to share it in the chat, and I'm going to jump over to X and share it. But as you can see, here's all the numbers in this for the committee members, and you can call or email them and ask them to vote yes. Again, this hearing is tomorrow in Florida, so if you can get that done soon, that would be a great help to them and their effort to put sound money out there. Joe, can I just, I'm going to just pull this off the screen for a second. I put together a clip, about a week or so ago about the gold. We were talking about gold on one of our shows, right? And we were talking about, because they were talking audit Fort Knox, and we started, oh, this money's missing, this gold's not here, this is that. And guess what? That is one of my highest viewed clips. It is in the number 2 spot, which I thought was kind of crazy. Techman is in the house. Techman, good to see you, man. Good to see you. Appreciate you being here. Joe, any thoughts about gold you want to throw in there while I'm throwing this stuff over on X?
Yeah, gold continues to go higher and higher, all-time highs, like crazy.
Yes.
The fact that I was this close to buying gold when everything kind of went to crap a few years ago, I was so close to buying it. And I was like, well, maybe I should just have the money in case, I need to start living in the woods, and I'm buying like camping equipment and axes and also the good stuff, shovels. And turns out I didn't need that, but the better investment would have been gold. So,
yep.
I do think that gold and silver, especially with Diaz, what's his name again?
Daniel Diaz.
Daniel, yeah. Daniel's a good dude. We've had him here, Crypto on the Rocks, and really great dude. We need to get him back again. Crypto on the Rocks is every Friday, 7 p.m. Eastern Standard Time. It's where a whole bunch of guys, we just come together, guys and females, we come together, we kick up our feet, and it's like we're kicking back around the campfire, and we're just talking. It's just very relaxed.
Have a couple of drinks, shoot the crowd. And it doesn't always stay on crypto, although I try to keep it there. Yeah,
right. But even with him, like he brought that fire back to me as far as gold and silver. I have yet to purchase, though. I came really close. I had a bunch of stuff in my shopping cart, and I was like, but then I end up spending that money elsewhere, which, I mean, I didn't really need it. It's just one of the things that I do. But yeah, I love it though. Gold, silver, it's the way to go. Gold, silver, Bitcoin.
Yep. Well, I was just about to say, you just hit the trifecta right there, the trifecta. And you still get the argument with regard to Bitcoin that, okay, how can it be a hedge? It goes down. Well, so does everything go down. It's about how quick does it recover? Right. You know what I'm saying? And gold, I mean, again, money since the beginning of time, basically. So it only makes sense to have that, and silver, for that matter, as a hedge. Only makes complete sense. So let me put up I saw this. Wait a minute. Let me get this off the screen here. I saw this, Joe, and I had to bring it up, put it aside to bring it up. Here it is. It's a new ad from Coinbase. Let's check it out real quick here.
Crypto wasn't for him. He dealt the classics. Low miles, big blocks and bench seats, hidden gems and dusty barns, diamonds in the rough. He'd take fixer-uppers and turn them into daily drivers. But when it came time to make a sale, there were no easy options. He never could figure out why wire transfers took so long. Banks were never open when he needed them. And cash, well, cash could be a challenge in a place like this. So when a repeat buyer mentioned another option, he listened. Just a simple transfer, secure, like a digital handshake. Crypto wasn't for him until it was.
Until it was. There you go. I saw that and I am like, I don't know, it appeals to me because I'm a simple guy. Maybe I don't know. What do you think about that one? Pretty good or no?
I think it was good. I think it was too long. They should have shown more of the hassles of the banks being closed when they need them, or
Yeah.
like he pulls up after work or hard days at work. He pulls up and they just closed. It could have been where he's going to Western Union to send some money, and then it's like so expensive, and they're not going to receive it till such date, and everything has to be filled out correctly. Just like all the true hardships that we have when it comes to
Actual
transferring
hassles.
money. And
Yep.
then they show us like, oh, you can just transfer like this, boop boop. It's like, oh, that was quick. So if I was there advertising in their thing, that's what I would do. All the hustle and just all the bad stuff, all the stuff that we hate, the closing, the fees, the waiting, like that's what I would have really stressed on. And then here's an easier way. Boop.
And the fact that they can say no. Just the fact they can say no, because that money in your account ain't your money. And let's see, usernames in the house. Hashtag Rib Chat. Come on, hashtag Rib Chat out there. Chuck Danger in the house. Appreciate you. Lower rates will recover the stock market and help us with tariffs. Whoops, I just blocked it out. What Trump wants to get, Trump gets. I'm guessing the Fed will drop 25 points with no expectation of further lowering. Okay. There you go. Interesting. I mean, everybody's thinking that we're on a hold pattern right now, which is why I put that poll up there. But we'll see. We'll see how it goes. What are we saying here? But we'll still lower another 25 basis points as they see good results on the horizon. Interesting. There you go. Interesting. They always phase it in an undisapprovable way so they don't look stupid no matter. Well, that's debatable. That's debatable.
I was just gonna say.
And
Debatable.
And what's Techman saying? I'm over here trying to skip the commercial.
That's what I started laughing on that. I can just see him too. Where's the skip button? I was like,
Yeah. Live. Yeah, you gotta suck it up there, Tech Man. Appreciate you though. Appreciate you.
Funny.
Hey, listen, again, if you're new here, make sure you smash that like button. Make sure you subscribe. Appreciate that. Make sure you're following Joe. Link is in the description for all of his information as well. And right now we have 179 people on X. Thank you so much for being here on X. Really appreciate it. Truly, I do. And we've got one person on Facebook. We'll just throw out the numbers here that I can see them. And we got another currently 15 on YouTube. Appreciate everybody. Thank you for being here. Yes, we are going to be covering the FOMC meeting live as it happens. The speech by Powell that's slated to start at 2:30 Eastern time. I am refreshing the screen to make sure that I don't miss it, obviously. And we will go live with that and give you our comments. And Joe's got the Bitcoin chart pulled up. So we can, matter of fact, maybe we could take a look at that ahead of time, Joe, if you're willing to do that, and then we can bring it up as we go. Sound good?
Yeah, sounds good.
All right. Yeah. We'll take a look at where we are, because I mean it was kind of doing a bit of an uptick there earlier. So is it still doing that right now?
Yeah, right now it did have the past 7 minutes. It dumped. I mean, I wouldn't say dump, it's up like less than 2%, but about 1.66%. And then right here, I'm expecting it to come up and then roll over again. But it's just whipsawing right now, where basically all the gains that were lost are gained again, and then lost, and then gained again. And this is done so that the people who are shorting can get liquidated.
Yeah.
That's all that is.
Yeah, grabbing
liquidity. This right now is on the 1 minute time frame. So if we go to the 15-minute time frame, let's go ahead and take this off. 15-minute time frame, we can kind of see that the price did come up here, slowly started coming down, and then I mean, just this little dump that we had right now found support. Wait, this is not a trend line. No, this is just kind of a curve. But now it's coming up. So trading anytime during the FOMC meetings, especially, is extremely volatile, extremely risky. Um, Most times it does not play out to market structure. The market structure could say we may be going up, but then the FOMC and he just says a word, just a word, because these bots are programmed for the words. So he could say a word and then boom, it comes down. He says another word and then boom, it goes up. So be very careful on this. If you do trade, make sure you're trading with very low leverage so you have more cushion up or down, and then also have a stop loss in case you do get stopped out versus getting liquidated. But yeah, it's going to be interesting to see what plays out. And right now, you can get a quarter and say, oh, it's going to go up, heads, goes up, tails, down. Like literally, that's the point right here. Because it should hypothetically go down based off of what we've seen. But because of what's happening right now, it could go either way. So it's literally a coin toss.
Yeah, I don't know. I'm personally thinking after he's done talking, it's gonna go down. But again, that's wait, where's my banner? Here we go. Not financial advice, not a financial advisor, old guy on the interwebs here. Just kind of giving you my proverbial 2 cents. And we got some new people that just jumped in where I just lost everybody. Where did it go? All set is in the house. Appreciate you being here. Welcome. Matter of fact, let me remove this. We'll come back up here full screen so you can see our beautiful faces. And Crypto City saying he's leaving work, be back in about 20 minutes. Drive safe, my friend. Appreciate you. Username. He's saying he's at a Thai restaurant and have you guys muted. I am just pretending you're talking about rib chat, and so awesome I am. I love it, username. I love it, man. I love it.
Username is I love username.
Yeah, definitely. Dave P. Yes. Oh, he made it. Crypto Jar in the house. What? What? No cut. No cut. What are you talking about? Oh, no cut. Oh, no cut with the we haven't gotten there yet. I'm like, I thought you were talking about what you were saying earlier. The first thing I highlighted, Jar, was of course your comment about Bitcoin. So yeah, we shall see. We shall see. About 10 minutes left before he's supposed to be starting that. Chuck Danger saying not to be a conspiracy guy. We don't mind conspiracy guys. But last time the stars aligned this way was right before the Great Depression. Oh, right before the collapse, the Fed lowered rates.
Not only is he talking about that, but several people I look up to are talking about this. And the more data we have, the more, like the more days that go on, the more months that go on, the more we can see the patterns kind of. We don't want to see it, but we end up seeing it, and we try to convince ourselves that it's not happening.
Yeah, that we didn't see it.
I mean, that's what I'm doing. That's what I've been doing. Like, I'm trying to convince myself, no. It's like, it can do this. It can do this. And then the more time that passes, like, no. And we break a level. It's like, it's not looking good. So if you know how to short, you can make money. So if you don't know how to short, watch my channel, watch other channels. Like, ask, how do I short? So you can get ahead of the game. Because shorting, that's the only way we're going to make money, really, for a while, in my opinion.
No, you're probably right. We're staying steady with the rates. That's what the general consensus is. That's what everybody is kind of thinking. And listen, if you're over on X, again, we got over 180 people on X. I appreciate you. Throw some comments in the chat, say hey, anything. That way we can recognize you for being over there on X. Appreciate you being here as well. So again, we're gonna go live. We got just about 10 minutes before Powell's supposed to be live talking about that. And I want to bring up the Citizens for Sound Money again, because we just had a bunch more people jump in. So let me bring that back up again. It's in the live chat on all platforms. And if you're on my YouTube, it is in the description as well. Basically, Citizens for Sound Money reached out and asked if I could help to promote this. So I figured what better place to be promoting this except on my FOMC live stream, because I mean, come on now, sound money. Okay, gold, silver, definitely sound money. So here we are. Basically, again, they have a hearing tomorrow in the banking subcommittee in Florida on this HB 999, which is their make gold and silver legal tender in Florida bill. So that's tomorrow between 2 and 5 p.m. Eastern time. And if you want to attend, if you're in Florida and you want to attend, that's at Morris Hall. Basically, they're asking you to contact the subcommittee members and encourage them to vote yes on this particular bill. You can call, obviously, or email them. And in the post here, they've put everybody's number and email address as you see me scrolling down here. So whichever, I mean, I get it. We don't all have time to sit there and wait for them to take our phone call or whatever, because, if there's not somebody sitting there, one of their lackeys taking the phone calls, that kind of thing. But send an email, let them know, because this is a huge move. Not just, I mean, we see a lot of it going on here in the Bitcoin space with regard to trying to get Bitcoin as legal tender in a lot of states. And I'm all about that. And frankly, I think these guys should combine forces, if you want the truth, and just ram it all through with gold, silver, and Bitcoin. But I get it. That's, we're probably not there yet per se, but this is huge. So if you are in Florida, you live in Florida, I can't even talk right now, and I haven't even been drinking. This isn't even crypto on the rocks. Anyway, make sure that you are helping these guys out, and contacting the committee members before their meeting tomorrow. Appreciate all of that. Joe,
I love
thoughts?
Daniel Diaz, man. Daniel is
He's
extremely smart.
yes.
Like you have a lot of really smart people that you know. Like Daniel, dude was just. I remember the first time we met, Crypto on the Rocks, and dude was just like blowing out of the water, just crazy with the knowledge.
Yep.
So yeah, definitely. If he's like, and he's always working hard too. Pushing all this stuff as far as gold and silver. So yeah, it's gonna be very interesting to see if it goes through. All the stuff that he's trying to work on. And it's a lot of hard work too, a lot of organization and everything. So
Yes,
he's always busy too, like going here and there and just legislating, and it's a lot of work.
Well, did you see the last interview we did on Matrix Money podcast with Daniel? He was mentioning that the CEO of Citizens for Sound Money has passed away. So now he is basically had to take over that role as well, because again, he's the
Wow.
executive director. So, I mean, I don't know if there's other changes going on or whatever, replacing the guy that passed, but basically his workload has doubled. So he's not just doing the actual legislative work, he's also doing the day-to-day with regard to
Right.
Citizens for Sound Money. That's crazy. That's a lot of work. He was doing
So
a lot of work just with the legislating, never mind the other stuff.
So what you're saying is, for him coming back to Crypto on the Rocks, there's a chance. That's what you're saying. There's a chance.
Well, I'm very hopeful that he's going to, but honestly, I think I'm gonna have to corner him for like a live stream like this in the evening in order to get him to come back. I got a feeling by the time he gets to Friday night, he's just like this. Close the doors, plug some plugs in my ears. I don't want to talk to nobody. And what is this? On another note, what is the news? There is an active shooter at CIA headquarters. I obviously don't know anything about that.
Wasn't that like a day or two ago? Like, my days get mixed up, but wasn't that like a day or two ago?
I didn't
I
hear
heard
anything
something
about
that. Yeah, it was on the news. But I think it was like a day or two ago. I didn't like fully listen to it, but I just kind of heard it really quick. But as far as like another one, I haven't heard of anything.
What's going on. I think he's saying that's now. And
So,
that's crazy. I don't, honestly, I'm sorry, I don't know anything about that. Obviously, not dealing with that. I'm busy trying to just hold on to this here. I'll try and go look it up. If I don't know, Joe, can you hold the fort for a minute there? But
yeah,
I try
definitely.
and go look it up.
Yeah. Yeah. So right now, of course, Bitcoin is kind of bouncing off of an area right around 84.3. This is right around the area that I have a trend line, which goes from my previous cycle, which is right here. This is on the 1 minute time frame. So we're just kind of just watching these levels. Now, these levels, sometimes they'll hold, sometimes they'll be respected during these FOMC meetings, but there's a lot of times where they're not. So whenever we're doing this, whether it's a FOMC meeting, especially the meeting, because once we mentioned, every word could trigger it either going up or coming down. So this is when we have to just kind of sit on our hands. And I mean, if you want to scalp, man, you have to be quick. You got to be really quick. It came down here. You see it starting to come up, and then you shoot for it. Now, one thing that I think is so funny is everybody who shows you how to trade after the fact. Look right here. We double tapped right here, and then this is where when you want to short. Look, guys, we're in a zone right here, and based over this zone, you want to enter up here because they see what happened. Like if you're in the moment, you're not going to call certain things out. Now, when the price was up here, on the stream, I was saying that this would have been a nice area to short, and and then I went back to it too, and I said this is a nice area to short. And then sure enough, I mean, if we look on a smaller time frame, you can see got rejected, making lower lows, and then it rolled over. And whatever our target been here depends on our amount of leverage, and then just shot up and then came back down. I don't think we would have been stopped out though. Depending on the leverage. Did you end up finding it?
I did.
Okay.
Right here, I'm bringing up one of the headlines. This is just the first one I found, so I'm not. It is what it is right here. But gunman opens fire outside CIA headquarters in Virginia. Heavy police deployed.
Wow.
Exactly. Major security incident unfolding outside CIA headquarters in Langley, Virginia on Wednesday after a man armed with a gun reportedly fired multiple shots into the air and made threats near an entry gate. Authorities quickly responded, leading to a heavy police and SWAT team presence at the scene. That was reported by NBC News. The attack comes just hours after former President Donald Trump, okay, that I don't understand that. Authorized the release of 80,000 pages of previously classified documents related to the 1963 assassination of President John F. Kennedy. Eyewitnesses describe a massive law enforcement response as police officers, military vehicles, and fire trucks rushed to the facility. Roads leading to the CIA campus were shut down as authorities worked to contain the threat. And I guess there's a thread right here I'll put the link to this article, and if you want to go ahead in and onto that X link, you can. Just give me 1 second and I'll put that into the chat, and I'll put it on X. But I'm just gonna. Looks like Powell's going live. Hang on, let's get over to that. We don't want to miss it. That's why we're here. That's why we are here. Here we go. And let me bring that up full screen. Put his volume up.
Good afternoon. My colleagues and I remain squarely focused on
Seriously?
achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid.
Do you have the closed captions
To our
while you're trying to get the sound?
So the sound is as high as it will go. I'll give me 1 second.
Today, the Federal Open Market Committee decided to leave our policy interest rate unchanged.
There it is.
We also made
unchanged interest rates. No change.
Decline in the size of our balance sheet.
Is there captions?
I'm looking. I don't see it.
Economic developments. Economic activity continued to expand at a solid pace in the fourth quarter.
I
of
don't
last
see
year,
a thing for
with
captions.
GDP rising at 2.3%.
Sorry, guys.
Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened
While we're watching
uncertainty
this, I'm going
about
to see if I can get it on
economic
something else to make it louder. Hold on.
It remains to be seen how these developments might affect future spending and investment.
Yeah, that was funny what
In our summary of
Dave P
economic
said.
projections, the median
He's
participant
all
projects
so they caught Jason Bourne.
to rise 1.7% this year.
Yeah, I saw
Like,
that.
Lower than
no.
projected in December, and to rise a bit below 2% over the next 2 years.
Tell me
In
it
the
ain't
labor
so.
market,
I love that.
conditions remain
And right when he
solid.
said that too,
Payroll
I can hear the
averaged
music.
200,000 per month over the past 3
Wherever it
months.
goes.
The unemployment rate at 4.1% remains low and is
Okay, so I'm
held in
gonna
a
send
narrow
you a
range
link
for the past year.
in the private chat and
The
then
jobs to
see
workers
if
gap
that
has
one's
been
Okay,
better.
steady
I
for
think I
several
got it.
months.
Hang on. Let me bring this
Wages
over.
are growing faster than inflation and at a more sustainable pace than earlier in
Sorry,
the
guys.
And thank you guys for being here. Put a one in the chat. Put a one in the chat. Love to see who's here with us. Put a one in the chat. And let me know if you agree with Dave P. Did we catch Jason Bourne? Let me know.
recovery. Overall, a wide set of indicators
You can hear that better,
suggest
yes?
that conditions in the
Much
labor
better.
market are broadly in balance. The labor market is not a source of significant inflationary
It's still
pressures.
low, but it's much better though.
The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current
Labor
policy
market
stance
is
is well
weakening.
positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard.
I just want to see what the first question is before we
Howard Shire with
jump
Reuters.
in here.
Thanks for your time. So 2 things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out, and the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also frankly a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Okay. I'm gonna just lower that. I can leave it running in the background. So basically, for those who might be tuning in after the speech started, basically they're holding rates at this point. That's the base case. Um, he's basically saying that from that first question that he believes that part of what we're seeing with increase in consumer pricing is due to tariffs, which okay, maybe. The degree to which, I don't know, personally, I'd be a little like, I don't know. That's a little sus given the amount of time here at this point, because we're not even, again, 3 months in. But my opinion, the hell do I know? And the other piece was, if you parse through this, it seems that they're looking toward June, I think he said, or July, I think is actually the next one. June or July, I can't remember. Sorry. It is when they're looking for the potential next cut. Joe, anything you want to throw in on that there?
Nope.
Did I think I hit most of it right there. What's this saying? CCM feedback, maybe next FOMC pull up the BTC chart next to Powell. Yeah, I can't bring up like a 3-way thing like that. Well, actually, you know what? I might be able to. This has a new. Thank you. I will try to set something like that for the future. That was a capability I didn't have up until like I think they just instituted it in StreamYard, which is the program I use to do these live streams, up until like maybe, I don't know, a couple of weeks ago. So I will try and set that in place. Joe, though, can we take a quick look at the charts real quick, see what's going on?
Yeah, it's just teeter-tottering right now.
Okay, I'm trying to bring it up, but for whatever reason, it isn't letting me. There we go. Sorry.
Yeah, so this is on the 1 minute time frame, and it's it's finding so far respect on our trend line, and then here's our major strong level of 84,250. So right now, just kind of going back and forth. So, depending on what he's saying, he's just
and that's what I'm saying. It looks like a lot of what he's saying seems to be priced in, as they say. Yeah. No, maybe. And
so nothing too crazy right now.
Okay, fair enough. Let's bring him back up. We'll jump in and see where we're at here with what he's saying. Turn the volume back up.
Very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But I given where we are, we think our policy is in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at the they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
I just want to see what this next question is, but then I got something I want to throw in there.
Mr. Chairman, Edward Lawrence of Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting, relatively high productivity. We've got unemployment, pretty close to its natural level.
Exactly, Chuck Danger.
The hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs. So you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
All right, I need to step away for a second, because he's missing a couple of points that, if you are following this channel or Piper Academy's channel, I mean, Army Piper talks about it all the time with regard to these job numbers. Listen, they get revised down all the time. And the only thing that's been keeping job numbers afloat has been these government jobs that are never going to get filled. And now layoffs, oh, good Lord. It's not just the fact that they're laying off at a lower rate. You've got people on the other side of that going and getting 2 or 3 jobs to survive. These are pieces that as he says, isn't in the data, but I think it's in the data. He's just choosing not to parse that data in that way. And like I said, Chuck Danger, spot on. Only one man could say so much and yet nothing at all. Also saying, I wonder if he is factoring people with jobs taking on other. Thank you. That's what I just said. I didn't even realize you had just put that in there. So that's perfect. Exactly. He's not. Even if, and I guarantee that data is in there somewhere, he's not pulling that data out in order to in order to actually evaluate and make decisions on that data. And then Chuck Danger says that metric should be reevaluated. Some people get laid off and get in the breadline. Yes, some of us already have 2 jobs, exactly, and tons of skills to stay employed. That metric can be skewed by lazy people. Amen, Chuck. Amen. Exactly the point I was trying to make. I think you might have made it more eloquently than I. And he says lazy people who don't have much of an impact on the rest of them. Yes, exactly. Joe, I know I'm sitting here dominating this thing here. Anything you want to add to that? I'm sorry. I'm not meaning to step on you.
Oh, no, you're good. No, not really. It just amazes me that all these people have all these questions, and we get the same thing every single time, every single FOMC meeting. It's literally like going up to a basketball or a football team, going up to a football team after they win the championship or whatever, and they go and they ask them, they're like, well, you know, it was a team effort, and you know, we just came together as a team, and you know, thank you, God, blah blah. It's the same freaking speech every time.
It's like they use the same information to give you a different answer. That's exactly what it's like to me. And I got to bring this up, Joe, because you were talking this on your stream. What? We can't just sit around and manifest things. Come on, Joe, manifest. Joe, come on, manifest.
Oh, all set. Oh my gosh, that's funny. That's funny.
Oh man. And Chuck is saying maybe, but you should know I'm still waiting for Jessica Alba to come out. Yeah, there you go. There you go. All right, let's tune back in here for a minute because we're supposed to be listening to him, not me.
Policy statement said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
You know, so we have two goals, right? We have maximum employment and price stability, and we have to balance those. And, you know, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, you know, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecasts that really show significant problems like that.
Bitcoin's going up 85.
Well, just to follow up, yesterday, the UCLA Anderson forecast said.
I'll leave him running in the background. Go ahead. I'll lower him a little bit, but let me go ahead. Oh, well, yeah, it is.
You can have him full blast, but we can look at this. There's a 1 minute time frame, 85.2 just broke through that.
Okay, there you go, folks. Well, we'll see if it's a liquidity sweep, but
yeah. And that's where the liquidity's at. Liquidity's at 85.2, and this was the beginning of the FOMC conference. Then, as he's talking and kind of whipsawing, and then right now, whoo, there he goes.
Okay, interesting. All right, let's bring him back up, and we'll give him a listen here.
Of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
I disagree with that, but that's beside the point.
Hi, thank you, Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed?
Seriously?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer and have nothing new for you on that today.
Good. Blow that off.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. we look at it. We don't dismiss data that we don't like. We force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that. And we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty.
How's Bitcoin doing, Joe?
And we're watching that carefully. And we
Still
think it's
going up.
a good time for us to
85.6.
wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
All bash Trump.
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year, and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months? If there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. That's
probably because a lot of what he's saying here is he's answering these questions are
you're trying to extract the signal from that. And the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was
or similarly for tariff and
that's sort of a special case of that. With the idea being, and I think
it's gone straight up, so it'll come down.
Are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know in a couple of months. We'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so.
But I'm sure they'll do their very best to try because
to make that assessment, and I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what in your mind would make something cross from noise to a signal? What that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or clearly not caused by tariffs, for example. It's something that was.
We'll take that down for a second here. Go ahead, Joe. We'll bring up your chart real. Whoops, I'm going to try. We'll oh crap! I just closed that whole thing. Damn it! I'll bring that back up right now. I want to bring your chart up. Go ahead, Joe. Hang on. What the? There we go. Too many buttons on this thing here. Go ahead, Joe.
Yeah. So here I thought I was going to roll over, but it didn't start coming up. Right now we have a little bit of selling pressure. Just know that when it comes up like this, when it finally does roll over, it comes down pretty fast. just to take up all this liquidity. You can see by the candle bodies, the sizes of them, and now it's kind of just going. So just be very careful if you are trading this. But right now we're, in this little box. We'll just see what happens.
Yep.
And it again, it's like every word, it started coming down. Then he started saying like what you were saying as far as it being dovish, and then it kicked up. So
yeah,
like,
I mean, a lot of what he's saying to me sounds like, okay, we're taking it easy, tiptoe around the tulips. You know what I mean? I don't know, my opinion.
Right.
And yes, all said, I haven't even been drinking and I still can't get it right. It's Joe, I'll tell you what, how about we take a little bit more of his conference, and then maybe we'll have you do a quick look at Bitcoin as a whole, and then we'll wrap it up, because honestly, I have a hard stop today at 3:30. So does that sound okay with you?
Yeah, perfect.
Okay. Let me get that, and let me see if I can't bring him back up here. Hang on one second. Get these damn buttons right. All right, here we go.
Inflation higher for longer. Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that. And we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Well, retail sales have slumped. Consumer confidence is down, and you're not looking into that enough.
First of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast. I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how raising the debt ceiling might affect the reserve supply?
Yeah. So in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June? Whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. You know, it's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
All right. I think I'm gonna hold it there, because that way we can start wrapping things up here a little bit. Let me just get that out of there. I want to say, hey, Automatic Beats in the house. Appreciate you being here. And great question, Tech Man. How is this guy not canned? That's all I got to say with that. I don't have any idea. Listen, I want to take a minute before we kind of start to wrap things up to say thank you to everybody who's been here today. Make sure you're smashing that like and subscribing and that kind of thing. And I want to say thank you to everybody that's been on X this entire time. We've had solidly over 235 people on X. I really appreciate that. Thank you very much. Again, links to everything, Joe's channel, my channel, everything in the description. Make sure you're going and following Joe, especially for all the great information. This guy is one of the hardest working people in the crypto space. So show him some love. And wait. And what Tech Man said, hit that. Hit that. Joe, how about we take a quick look? You wrap up Bitcoin, and then we'll wrap the stream. That sound good?
Sounds good to me.
All right, my friend. Here you go. It's all you. Take it away.
All right. So let's go on a higher time frame. We were on the 1 minute strictly for the show. This is what we're looking at in reference to the overall thought process. Now, anything can happen. That's one thing that we always have to stress. Anything can happen. We were looking at a possible lower highs and lower lows because it was looking kind of not so interesting. But because of this meeting, the FOMC meeting, it speaks for itself. It was more dovish than bearish, and because of that, we did break out of our zones. And currently, right now, we're at the 50% mark. So, if we do pull back from the height of this initial move to the lowest point of the initial move, if we were to pull back to about 50%, this is my decision point. What is the price going to do? Is it going to continue going up, or is it going to go down? So this is my decision point right here. And let me go ahead and get rid of these. This is what's going to just kind of let us know. This level right here was a liquidation area on the heat map. This is an area of interest. And while the price was down here, we either have a plan A, which this was my plan A. My admins were saying, nope, I think it's going to go up before, and who knows? Sure enough, they were right, and it did go up. It went up before it went down. Doesn't mean that it has to come down here. Nope, sure doesn't. But this time around, it did take the liquidity up higher, right at 85.2. Now, because of this move, I would expect it to pull back, possibly bounce off of our 84.250, which is a very strong level on the daily time frame. We can see that a few of these candles closed right here on this line. So this is really strong. So by it going up and having a retrace, I would not be surprised if it were to pull back right at 84.250 before either continuing up or coming back down. Right now, so the overall thought process is not bullish. It's looking very bearish, lower highs, lower lows. It'll maintain this until and this is the part that I hate about trading and about mentoring, it'll be bearish until it's not.
Until it's
you
not.
might think that's a cop out, but that's the truth. Once it starts making higher highs and higher lows, it's now changing the trend to where now it's like, okay, now we're targeting 91,965, 94,270. So unless it starts going up, down, making higher lows, higher highs, now this is our target. But until then, it could roll over and then go back to what it was doing, making lower lows and lower highs. So that's what I got. In my opinion, I think it all depends on what happens at 84,250. Does the price action come up, make a lower high from this high, lower high? Does it make a lower high and then break below the 84,250? Or does it have a retrace, let's say from here, wherever, but eventually break this zone? This is my zone that I'm looking at. And just to make it simple, because there's a lot of stuff on here, just to make it simple, if it breaks our dotted line, which in this case right now is looking around 82,354. If it breaks this, in my opinion, there's a really high chance that we continue going lower.
Downward. Yeah.
That's what I got on that.
I appreciate that look into the chart. I still believe, even after all the dovishness and all that kind of thing, I still believe that it's going to roll later, and we're going to be doing what you just said right there. That's my opinion.
And the thing that we have to know is that, like, everything is still bearish, even though price can go up, but remain bearish. That's one thing that we have to keep in mind. It's
Can't fight the trend.
Bigger picture. So you can still trade leverage or spot trade and make money going up and also down. But right now, until we make a higher high, so for the macro sense, once we break those levels that I was referring to, 91,965 and 94,270, once we break that zone, then I will be bullish. I'd start going to the bullish sentiment. But until then, until it breaks that, until it shows me something, I'm bearish. And I hate being bearish because I've waited so long. I know you have too, CCM, and everybody else out here. We have waited so long to be in up only mode.
Yep.
We're already past the middle of March. The first quarter is literally almost done.
Yep.
Where is the time where I just pick any random coin and then wait a week and it's up 40%? Where is that? That's where I want to be right now. So let me know in the chat. Everybody on X, let us know. Let us give you some shout outs. Same thing with everybody in the live stream right now. Let us know. Let us give you some more shout outs. You guys are the best. You guys are the reasons why we do what we do. You truly are. And
facts.
And I'm just waiting. Man, it's gonna be so exciting. So exciting. If you've never experienced a bull run before, let us know. If you have, also let us know, because you know what I'm saying is so true. The money, you will be surprised. Now, I must say, please do not waste all your money right now just kind of gambling, because right now everything's so crazy. Let the trades come to you, manage your risk. And when I say manage your risk, use 1% of your portfolio. When I first heard that, I was thinking, man, I can't trade with $1. I can't trade with $10. But I didn't know this. It's only risking 1% of your entire portfolio. So your stop loss could be $10, and you could be trading with 100 or 1,000 or 10,000 or whatever you want to do. But your stop loss, what you're willing to lose, is the risk. I didn't know that. I thought there's no way I can make money trading $1, $10. So that's the most important part. Manage your risk.
Facts, man, facts. And yeah, Tech Man, you are super right about this. One of the more volatile runs, and not in a good way either, at all. And 2017 did hurt a lot of egos. Yeah, I was one of them. Just saying. But call it what it is. Call it what it is. All right, guys. I hope that you found this stream helpful, watching FOMC live and Joe's analysis with Bitcoin and my 2 cents and sometimes jaded opinion with regard to how Powell reads the tea leaves with regard to what's going on in the economy as a whole. But I appreciate everybody being here, especially everybody on X. Again, super amounts of people on X, and I really appreciate that. Thank you so much. Don't forget, like I put in the comments on X, make sure that you are following myself and Trade Intuition. I put his link in there as well. And again, YouTube, Trade Intuition. Show this man some love, because if you're looking to trade, he doesn't make it, or I don't think anybody could make it much more simple than this guy. So link in the description if you're anywhere else. And on X, I already put it in the chat for you. So, Joe, I really appreciate you being here today, man. Thank you.
I love it. I love it. Anytime I can, come on, just let me know, and I'll be here.
I love having you here, and let's not forget, one of Joe's favorite places to be is on Crypto on the Rocks every Friday night, 7 p.m. Eastern time, right here. And listen, this week we're gonna try. My theme is we're gonna try and force the Bitcoin and crypto prices, whatever your favorite crypto project is, those prices up by attending Crypto on the Rocks and having a drink and a laugh. So we're gonna see if that works, but you got to show up to see if that works. So. Come on, 7 p.m. Eastern time every Friday. We are there. All right, we're going to wrap this thing up. Again, thank you everyone for being here today. Again, if you haven't already done it, smash the like, subscribe. You know the drill. And we will see you the next time. As a matter of fact, the next time is Friday night, Crypto on the Rocks. We'll see you then. Take care, everybody.